Welcome back. Continuing our coverage over the recent interest rate cuts this morning. The big question yesterday was whether the Fed would cut rates by a typical quarter point or a more aggressive half point. Their goal shifting from curbing inflation, which they more or less believe now under control, to propping up the labor market after some softer than anticipated jobs reports. They went with the half point cut. This does have ripple effects on everything from mortgage rates, which had already ticked down, to credit cards and auto loans.
When I sold my house and started really getting into looking, I just couldn't justify buying right now. I didn't see the value in it.
Jason Crampton owns Lincoln Street Barbers in Colorado Springs.
My money wouldn't go very far at this current time. Decided to rent, and I feel like it was a good decision for sure.
He and his realtor decided renting right now would actually save money until the housing market and economy settled in his favor.
So I anticipate saving at least 20 to 30 grand.
Sometimes that might save a client $750 a month between the two.
For Jason, it was a combination of the mortgage rates and how much money he'd have to pump into a fixer-upper. His realtor, Patrick Muldoon, says once concerns about everything from the cost of groceries and insurance subside, he might push his clients back into buying.
Inventory is coming onto the market, and we're not seeing buyers step back in. And a lot of that is simply because we've still got an affordability crisis, even though interest rates are down.
Economists like Dr. Bill Craighead call it the mortgage rate lock-in effect, where sellers weren't willing to give up their low-interest mortgage for a higher rate, which also discouraged buyers. But that could finally be shifting, with 30-year fixed mortgage rates dropping to 6.2% last week from a high of almost 7.8% less than a year ago, according to Freddie Mac.
Lowering our policy interest rate by a half percentage point.
And with inflation dropping from a high of 9.1% in June 2022 down to 2.5% last month, the Federal Reserve finally announcing an aggressive 50 basis points cut to short-term interest rates. Mortgage rates already dipped in anticipation, but the move also expected to spur other changes.
Lower rates would be something that might cause more builders to file for more permits, start more projects, employ more workers. Credit purchases, things that people buy on credit like cars, major appliances, those are affected by interest rates as well.
Still, economists like Dr. Craighead worry the Fed is acting too slowly.
I am concerned that the Fed, while they're doing the right thing now, is a little bit behind the curve, and I wish they'd been making these moves a few months ago.